Good evening, everybody. As good an evening as it can be. I'm afraid we have probably witnessed one of those events that we came to the realization that something was terribly wrong when we all watched the flames coming out of a World Trade Center and then watched a second plane fly into the second one. And I'm thinking that right now, to be able to kill people in a nation where we're so used to our freedoms that our life is going to change once more. So anyways, I could go on. But what we have to decide to do is figure out, what is this market going to do? As we saw today with the market down pretty big, the normal has been that when the market was down, at the end of the day, they would take it back up. Today, it looked like it was starting to do that, just on the fringe of starting back up again when the news of the Boston Marathon bombing came out, which kind of took all the wind out of any bullish sales. Of course, anybody or most people are going to be much more conservative and kind of sit back instead of buying, wait to see what the reaction to all this was. So with that, we saw another 60, 70 points to the downside going into the close. So the question is, isn't that just something that's just affecting the market trend? And the answer is yes, it's affecting the market trend in that what we're looking at is the graphic depiction of what's going on in investor sentiment. And right now, investor sentiment is telling us that they came out of the market, and they came out of the market more going into the close. So that's the investor sentiment. So we have to figure out what to do with that. So that was the point of the newsletter this afternoon. Is there's times when the market, or when we can use candlestick analysis to put us in situations where the probabilities are greatly in our favor. But then there's also times when we can take a look at candlestick analysis and say we don't have any idea what they're going to do from this point. So if you don't have those probabilities in your favor, then you either want to be market neutral or in cash. Does this point to a reversal in general? That's what we don't know. I mean, we can't assess what's going to go on in investor sentiment. Based on this. Now, based on this, yes, tells us that we're heading for more bearish implications. But that's got to have confirmation to it. So if we wake up tomorrow and the pre-market futures are showing the Dow is down another 80 points, that's going to be a pretty good indication of what's in investor sentiment, that they aren't coming into this market, they're getting out of this market. On the other hand, we wake up and the Dow's up 80 points, that tells us that there's other factors that they're going to slough this off, and that today's knee-jerk reaction was just a knee-jerk reaction. So that doesn't tell you too much about what's going to happen at this point, but knowing how this market should open based upon today's signal is going to be a good indication of what is happening, and we can take it or go from there. Yeah, but it was more, Cal, I would say this is more Yeah, this is not the fact that it was a pipe bomb size attack. This was the fact that the American society can be attacked from anywhere or anywhere. So what it really means is we're probably going to be a little bit restricted. I mean, I'm still livid every time we have to go through, or I have to go through a security system at the airport because some idiots over a decade ago used planes as a weapon. And then another idiot had some sort of bomb in his shoe. So right now we have to take off our shoes, we have to take off our belts, we have to take out every piece. I mean, that's still, and then what I saw. Anyways, I could go on. So right now, next time you go to a baseball game or a football game or a hockey game, are there? Yeah, then there was the underwear bomb. Thank goodness they stopped at that. So anyways, so at this point, we don't know what the investor sentiment is going to be from here. So there are times when we can't tell what's going on, and we're going to have to find out by the next by knowing what they do. If they open this market up tomorrow and start taking it back up, that means yes, this was an event, but it's not going to change investor sentiment as far as what's going on in the economy. On the other hand, if they open this lower tomorrow and continue this downtrend, then there is going to be some thought that this is going to change investor sentiment and the way the U.S. Does business. Now, gold was already crashing, and it was a very simple process to see that gold was not picking up any steam here in the last few months. I mean, we were caught in this downtrend, and then we started seeing gap downs. Remember, the further a downtrend stays in existence, the more likely you're going to start seeing the panic selling. And silver, same scenario. Downtrend, the longer this downtrend stays in effect, was this going to bounce? Well, we saw that it came right back up to the T-line, and we know what our signals tell us. That at this point we had a doji gap down back below the T-line. We knew we were probably still in a downtrend. To the magnitude they're going to drop it this much? No, maybe not. But we knew which direction we probably wanted to be oriented. All right. And let's see. You know, the crude oil. Crude oil, same scenario. Anytime you see an uptrend and they take it down, and then they take it back up, what should this uptrend be telling us? But if they're in a true uptrend, this high should be higher than this high. When they rolled it over, that told us we were still now back in a downtrend, that we could probably be heading more in a downward trend channel. So the failure here at the T-line is creating this effect. So what we can tell from that is that oil and gas stocks are getting clobbered, and gold mining stocks are getting clobbered, which we'll get to here in a little bit. Now, I've been short, let's see, what do we want to go through? We needed the dollar. The dollar looks like it's starting to head back to where it's in between the T-line and the 50. Want to keep an eye on this to see if they come right to the 50, that would tell us, or that would be the stochastics getting to the oversold area. If they break back up through, now we know we have wave 3 starting off of here. Now, if the dollar is getting stronger, that means the crude oil could be getting weaker, because that's exactly why crude oil prices went up so high, is because the dollar was getting weaker. It took more dollars to buy crude oil. So that's going to have some cause and effect. Sugar, still in a slow, steady downtrend. Cocoa has broken down through this downward trend channel, and now they're above this high, so next target eventually probably is up here to the 200-day moving average. I've been short feeder cattle ever since the failure. Again, this is observe the obvious. Comes up, fails at a resistance level, pulls back, comes up, fails at a resistance level, pulls back. I would suspect feeder cattle should come down and probably test the lower stages of this trend channel. Live cattle, same scenario. Evening star signal, still in a downtrend. I'm staying short until I see a buy signal and probably a trying to hit one of these support levels. And lean hogs, notice where it failed. Right smack dab at the 50. Starting on its way back down, downtrending channel. Could come all the way back down into this area. Oh, let's see. Did gold, silver? No, there's something else. Oh, interest rates. Interest rates are still heading lower. Bond prices still heading up. Natural gas. Natural gas is slowly picking up some steam here. This one in an uptrend until you see a sell signal, but that's probably because natural gas has fallen so greatly. Now you had this big base area, and now you're above that recent high. So I would suspect you're in an uptrend. When they do have a pullback, I would suspect they're going to come back and use this level right here to see if it's going to act as support. Now, I did that pretty... Okay. I know there's something else in the commodity area. Oh, the grains. Well, cotton anyways. Cotton, I'm short cotton right now. It started off, I had put last night that if it opened higher and traded higher, you want to be buying, but they never came back up from the open last night. And now you've got a bearish engulfing signal, still in a downtrend, and kind of broke this little support level. Let's see. Soybeans. Looks like it's trading lower after hours tonight. And corn. Bearish engulfing right here at the T-line. And it's trading lower after hours tonight. Let's see, soybean meal, it's probably going to be down also. Yes, back below the T-line. Okay, so if we were looking at what happened positive in today's trading, obviously not very much. Now, we recommended BDBD a couple of days ago, and it held up well today, stayed up above the T-line. Things like TRHX, that tells you a story. That's something's happened there. I didn't see what the announcement was. Yes, you could call those would be called bearish J-hook patterns. So this one breaking out and staying close to the top end of the trading range, with the market being off as heavy as it was, tells you there's something in this stock that's much more compelling for people to be buying it, despite what the market is doing. Same scenario with our UNXL. I closed out all my positions as soon as as we saw the news come across about the bombing, because today's mode of operandi, or modus operandi of this market, should have been that they started taking it back up some going into the close, which is what they've usually been doing in this uptrend. And the fact that they started selling it off told us there was probably going to be a different dynamic. And since we didn't know what that dynamic was going to be, there was no sense sitting in long positions when we might not have an upside anymore. And I say we might not because today's selling created a sell signal in an uptrend, but it was now created by something that might change an investor's point of view. So why risk being exposed to a long side of a market when it looked like everybody wanted to be coming out of this market? Can always buy back in tomorrow if things turn positive. But anyways, UNXL was traded positive most of the day, still after this kicker signal to the upside. That's telling us there's something going on there. So if you're looking for longs, Rambus continued to move up in these market conditions, and WX also has a nice looking chart, gapping up, coming out of this belt hold area. Your doji sandwich, remember what a doji sandwich usually represents? But there's probably going to be more follow-through after that. That's what I thought. I didn't read enough report, Ed. Thank you. I kind of figured they had some sort of drug that got approved. And even Netflix traded positive most of the day, but sagged right here on the close. So it was up a little bit, but notice what it has done. This might be your case for a blue ice failure. They fell through the ice, they came up, tried to find the hole they fell through, couldn't find it. If this opens lower tomorrow, you want to be shorting it because this has the potential, if I can do this correctly, coming all the way back down here, basically to try to fill this gap. So that's something that you might want to take a look at some options tomorrow, depending on how they open this market. And one more that has upside potential because it didn't break its pattern is MERU. The slow rounding bottom, this one can still be bought if it opens positive tomorrow. Again, based on the market selling off heavily and this one staying up above the T9, keeping the rounding bottom intact. Now, somebody had asked, why did I sell BIGI or SBGI today? Because if they were moving this up, we're in an overbought condition, what do we expect coming out of a rounding bottom? Obviously, a pretty strong price move, which we got. Now, if there was something good happening in this stock, meaning a potential takeover or something like that, then we probably would have seen it open positive and continue. When they opened it lower and started trading it down, that pretty much gave us the information we wanted to know, is that they weren't taking it up anymore. So the worst case scenario would be that you take your profits. In this case, I took profits partway up on Friday and then moved out of my big profit positions and added higher strike prices, so I had less money exposed, that if it kept going up, fine. If it went down, I didn't have that much money exposed to a pullback. But when it opened lower today, a very simple strategy. After it moved up in the overbought condition, what do we usually see in the overbought condition? Exuberant buying. And if you have a big move like that in the overbought area, if it opens lower the next day, take your profits, because the worst case scenario would be that you close it out here and it starts moving back up through this level. You can always buy back. But the insurance at this level, the probabilities were that if they opened it lower, they were probably doing some profit taking. Okay, let's see. We did the longs. All right, so now on the other side of the coin, on the short side, obviously, gold stocks were getting whacked just as much as just because gold was getting whacked. So there's tons of stocks that all have the same pattern. AG, silver, just getting clobbered. KGC, getting clobbered. And I've got a whole series of them here. These are all mining stocks or gold and silver. All the same patterns. And you can see how the patterns were setting up. They came up, a lot of them came up, rolled over, and started gapping down. So, what is this? I could do this. SWC. These are very good patterns to go short. When you start seeing them start roll over, bam, roll over, bam, they'll take them to the downside. And I guess I don't need to do, but I brought up this many. Now this one's got a very good short chart because notice what it did. Bearish engulfing, left-right combo right at the 50. Today, gap down. With stochastics heading down, I would suspect that you could be targeting this downtrending channel. So this one's still got another 20% to the downside. Are options too overpriced on these now to be good? Are options too overpriced on these now to be good? On what is that? Or puts? Probably. So, but we're looking at these in hindsight. Now this one still probably has more downside. Most of them, most of them, now here's CLF. I think if you drew a line right down here, this is where your target is. So you still got a good 15-20% downside on CLF. We can make this big enough where we can see it. So that's one that can be shorted. So a lot of these probably are already gone. Again, there was just tons of them in the pshaw. They were all being pulled down like this. You can do bear call. Yeah, you can do bear call spreads, all depending on. You probably want to be doing bear call spreads with this close to if you're going to do April's, because the premiums are you can take advantage of whatever is left in any of the premiums, if there is anything left in the calls. Please comment. The gold stock started to roll over. Well, the gold stocks also, you could see, were already in a downtrend. So it wasn't like they were coming back up. They were rolling over, popped back up. So that's your kind of your bearish J-hook pattern. All right, so the problem will be, not the problem, but everything sold off today. So what was the ones that were selling off in spite of the market selling off, especially going into the close when nothing recovered? Well, things like WLT had a sell signal, potential sell signal, a bearish belt hold, but if it opened lower today, it should be shorted. Now, as you can see, this one probably has now just gone through this little downward trend channel. Let's see, is this the one I can do this with? Let's take it from right here. All right, right on that downtrending channel. Let's make this big enough where we can see it. But if this opens lower, we're broken down through that. Plus, look what type of force we have. They took it up and immediately started selling off, came back below the T-line and gapped it down. Now we're sitting on the support level. If they open this lower, the support level is not acting as support. There's probably more downside. So what we have to try to do now is which stocks have good downward momentum prior to today's big sell-off. This is one of them. Let's see. APOG. APOG a couple of days ago had a gap down. Doji followed by a gap down, which is your best friend. Tried to bring it back up, took it down some more. At least the first target is down here to the 200-day moving average. PWE. We saw this had a bearish. This was already in a bearish trend. Big bearish engulfing signal. Could not close this back up above the T-line. We had a day where they closed it above the T-line, so what did we need to see the next day? We need to see bullish confirmation. Well, the close back below the T-line told us they weren't taking it up. They were still taking it down. So this one, even if the market, just market trading soggy this morning, this one was a perfect short because it was already in a downward trajectory. Let's see. All right, I'm just making sure I'm getting the answer to answering things as we go along. WG, this was a bearish Harami, followed by a gap down. This one still has more downside. This one, again, I'm picking out the ones that have sell signals based upon whether the market had gone or stayed up or moved back up today or not. Another J-hook pattern. Now, this was a hefty move to the downside, but notice what it did. It failed right here at the 50, another blue ice failure, telling us there's probably going to be some more downside to this one. TPC. Wow. Another failure at the T-line. Where's the next possible target? Down here at the 200-day moving average. If they open this one lower, what's it telling us? Telling us that they're not going to support at this level anymore. There's your next support level. Please draw a J-hook. J-hook, this is a bearish J-hook. Wave 1, wave 2, there's the hook. Wave 3 to the downside. NOC. NOC, a flutter kicker signal. Flutter kicker signal is, notice where they open this after this uptrend. Open it right here about the same level as the previous day. And did a doji. Then what do we know about the rule of a doji? It's going to move in the direction of how they open it after a doji. So they open it lower and take it down. That's your flutter kicker signal. If you took out this doji, you'd essentially have a kicker signal to the downside. This one will probably be a good short, anticipating that it's heading down into this territory. And Bass, one of the drilling companies. There's that doji gap down. Looks like there's enough energy to get through the 200, which means here wave 1, wave 2, again, a bearish J-hook pattern that could take you down, way down. I would probably do the May puts because I don't want to be doing the Aprils right now because that's now cutting into our time frame. Except I might look at the selling a call spread, shorting a call spread, because that way I'm taking getting the downside plus getting the deterioration of the premium in the calls. So if I was doing the Aprils, they would be selling a call spread. If I was doing the Mays, I'd be buying the puts. AHS, another failure. Did not hold up at the 50. Where's the next target? Potentially this low, which would coincide with the 200-day moving average. And who wrote that one? Let's see. AEGN. Bearish J-hook. Wave 1. Came up, failed right here at the T-line, came down through the 200. 200 is not acting as support. If this is wave 1, wave 3 should take us all the way down into probably the $17 range. NTWK was one that we were long until it closed back below the T-line the other day. And we closed it for two reasons. Because number one, it closed below the T-line. Number two, you can see that it was not in any upward trajectory anymore, and stochastics were heading down. Then we had a lower open, which means they weren't going, unless they opened it positive and took it back up, you wanted to be out of this position. So this one probably is not going to hold at the 50. The next support level is right here. So you've got a good 20% potential on this one to the downside. NAV, also a very nice short. Again, the bearish J-hook pattern, which stochastics up here tells us more than likely it's not going to hold the 50, which makes the next target the 200-day moving average, which would also coincide with filling that gap down there. So if you can see wave 1 and see that J-hook pattern on the downside, that tells you probably want to be going short on this one. Let's see. Yeah, I'll get to everybody's individual stocks as soon as I tell Jim to do the double line. And so don't worry, I'm not ignoring you. I'm just trying to figure out who wrote these darn symbols. SkyWest came down, came back up. Remember, on a bullish side, if it comes up to a moving average, pulls back to the T-line and comes up the second time, it's usually going to go through. Same scenario here. If it came down, tested the 50, pulled back up, failed the T-line again, it's going to go through, making the next likely target down here at the down here to the 200-day moving average. SGI. Oh, that's not the SGI I wanted. S.SGI. Well, Shazam. Well, that's just a fine howdy do. Let's go to the next one. CZR. Well. All right. It's telling us we need to take a smoking break here. There we go. CZR. Came up. Notice when it came back up to the T-line. Doji. It wasn't any convincing uptrend. Failure. If they break through the 50, there's your next target. That's got a good 40% move to the downside. And NAT. Down wave 1, wave 2 failing right here. Wave 3 not supporting at the 50. Wave 1, wave 2, wave 3 is down here in the 650 area. So what we're kind of looking for is the ones that were already on the way to failure before this market sold off today. And the sell-off today was just confirmation. So those stocks that are weak, and right now there was not a whole lot of stocks in the scans today that showed any strength. So there was damage done today, meaning there is a lot of chart patterns that aren't showing any real great bullish sentiment anymore. A lot of it's going to the bearish side. Let's see. By blue ice failure, do you mean strong resistance at the 50 or failure of support at the 50? Resistance at the 50. Which one was our blue ice failure? Well, Shazam. Well, let's see. NOC. Well, that's a fine howdy doody. I wanted to remember which one it was that had the blue ice failure. Oh, Netflix. Netflix. This means this had the potential right now of doing a scoop pattern. But if we have a failure here, I mean, if they open this lower tomorrow, and especially come back down through the T-line, that's a blue ice failure. That means they've come up, they came through the support level. Now they've came up and tested it, and now it's acting as resistance. If people see it's acting as resistance, they're not bullish anymore. That's when you can really start seeing them kind of tank a stock. BIF. Oh. All right, let me see. So Netflix was the one that had the blue ice failure, and then NOC, this flutter kicker, tells me this one's probably got enough force to push it all the way back down. If you drew kind of a line right down through that support level, you're right back down below the moving averages. Okay, thank you. I don't think fast. I read faster than I think, which obviously I don't read very fast. And that's kind of a blue ice failure there. Yes, came down through the ice, came back up, failed, find its hole. Now it's heading back down. So suspect some more downside. Okay. Is there any questions as far as candlesticks? Do you think that the SPY formed a doji on Friday and an open lower that was a sell signal? Yes. That's exactly what it was telling us. The Dow forming a doji on Friday told us it had to do one of two things. It told us that we had to see it open positive to stay in it. There was too many stocks that had that same scenario where we had kind of a doji on Friday. Whoops, that wasn't it. Oh. Trying to think of which ones they were. I closed out a few positions on the open because it was a doji lower open, and I can't remember what they were now. That's just great. But exactly, when you see a doji up in the overbought area, and let's take a look at the SPY, see if that. You know, the doji up here, and they open it lower today. That told you exactly which way they were going to take it. Now, where were they going to take it? How far down? We didn't know. But as soon as they went through the T-line, and they were down significantly, fairly fast, that told us that something had changed. At best, it had to come up by the end of the day and close above the T line to tell us that their uptrend was still in progress. Do you place a buy stop after it closes above the T line, or place the stop above the T line and wait for it to hit, as in PWE? Usually I'm not going to be able to see. On a case like this, if I didn't buy it here, because if I bought it here, I would want to see what it did at the T line. And in this case, it would have gone through. If I hadn't bought it here, I need to see it close above the T line, and then I'm going to buy on bullish confirmation. Now, here's a case also that on bullish confirmation, if I was buying this one and had bought it that day, I would have been back out once it came back down through the T line, because that was, or especially when it came back down through the previous day's open, because that's not what it should be doing if it was in an uptrend. I got most of my money back on my put on the SPY for my big loss on FF5. All right. So right now, as I said, we don't know which way they're taking this market, but there's the one obvious. We don't really have to know, but we can pretty well assess that we're in a downtrend if you see a candlestick sell signal and a close below the T line. So right now I would be leaning very hard to the short side, and that could all change tomorrow. If they take this market back up 85 points and close it above the T line, that tells us the uptrend is still in progress. If I had shorted anything that was now looking too strong, just close it back out. So that's why we want to figure out where the trend is going, because as we've seen, in stages like this, I mean, you can get whipsawed to death. This is where you make big money. Stages like this, you get whipsawed to death. Made very good money right here. Unfortunately, gave some of it back today, but that's part of the game, is make the money, and hopefully you don't you give some of it back and you get ready for the next move. Is there a history of the markets going south around tax time? I don't think so, and I don't really care. Betsy, does the seasonality show anything about tax time? Yeah, sell in May and go away. So the nice thing about knowing what the truisms are, or the sayings like sell in May and go away, is we can see whether that's true or not by the graphics of what's going on in the candlestick signals. I think last year that wasn't true. Or sell today and go away. That's true. Okay, with that, Jim, go ahead and do the double line. And do another double line in 12 seconds. Yeah, the market was brought down by the China data, but remember, in an uptrending market, you can have bad news knock it down in the morning, and after everybody's digested it, then they'll take it back up, which was, we just saw just an inkling of that, about 30, 40 minutes left to go in today's market, where they were down 210, and then they were only down 180. It looked like we were starting to bring it back up, and that's when the news hit about the bombing. I think that's what kind of took the wind out of everybody's sails. All right, Jim, do your second double line. Okay. Let me scroll back up here. Ray, I got out of all my positions today. I'm short feeder cattle. I'm short. I stayed short in feeder cattle. And notice what feeder cattle are doing. Came back up to the resistance level, heading back down. I also started adding some live cattle to the short side, and cotton. Cotton, I was going to be buying it, had opened positive and traded positive, but last night it opened up here, waffled around a little bit, and then started selling off. So that told me that they weren't getting up above the T-line, so I'm short cotton. Oh, Betsy, put a 3 or 4 that we want to short this time of year. PSLV. Again, one of the silver stocks. So all you can do right now is continue to stay short on these until you see a buy signal. Whoops, I did that wrong. Sprint. Sprint was that being bought out by somebody? And Tesla. Al Shaw. Tesla, you can stay long as this stays above the T-line. And TSO, you want to be short this one. There's your doji sandwich. And remember what the results of a doji sandwich is. Got a bearish J-hook pattern. The results of a doji sandwich is that there's probably still more downside. And the SPY, my first target is obviously, or would be, the 50, and then see if it can hold there. Okay, that's what I thought. That Dish had made an offer. I thought I saw that early this morning. Thank you. DDD also looks like it's got a failure here at the 50, which means unless we see a change like a Morningstar signal or something like that, that means they could be pulling this back down to the 200. SDS was the short. Okay, that's so you want to be buying this one if you want to be short this market. Here's the SDS ultra short. Is that the 2 times short? So if you want to be short and you can't do it in your retirement funds or your retirement accounts, you can always buy the short funds. EMC, nothing here yet. You stay short. The likely target would be I draw a line right down through the bottoms here, which tells me I would be looking for this territory. VMW. BMW, if you're short, you stay short until you see something that tells you the bulls are in control, but that's not yet. This has got a good looking chart. Remember, the bigger the signal, the more there's been a probability of a change of investor sentiment. So this one you can stay long as it stays above the T line. And Lygen, ooh, that swung around today. This one, with it starting to turn over, needs to open positive and trade positive to stay in it. If it starts opening lower and trading lower, that means they can't get back up above the 200. You probably want to be out of it for a day or two at least. Nice little rounding bottom J-hook. Another one that can be bought on positive trading tomorrow. Now, there are still going to be some stocks that you want to be buying, and those are the ones that showed strength today. TZA is the bearish, the very bearish small caps. So this one, if the market heads lower, you want to be buying this one. Is that the triple? That's the triple, yes. and TECS. This one you can be buying, just make sure it gets through the 50. But notice it's got that little flutter kicker to the positive side. And FAS, okay, all right. I could have saved myself. Another one that can be bought on positive trading tomorrow if the market opens lower. GTAT, bearish Harami. Now, does this mean anything? We're not in any no man's land. Well, we got a bearish Harami at the same place that it bought or topped out before. So now the worst case scenario is you should be out of it, but then watch to see if it supports at the 50, which acted like a support before. If it supports a second time, then they'll go up to the 200-day moving average. MTG, this one closed back below the T-line. This one, if you didn't get out of it today, you should be out of it. But if you're out of it, or if you're in it, it better open positive and go positive. If it opens lower, you want to be out of it. You can always buy it back if it comes back up through the T-line. BIOL, it was all right, but I would put a stop. If it comes back down below today's low of $5, you want to close it out because that means they're probably bringing it back down to the T-line. Let's see, BXX. I'm not finding that one. Is it BX? S.BX. Blackstone. Bearish left-right combo. If this opens lower, you know it's probably going to at least, if it opens lower, it's going to come back down and test the 50. Then you have to see what it does when it gets there. KERX. This one closed right on the T-line. Makes it very simple. This one, to stay long, has to open positive and stay trade positive. Otherwise, you close it out if it opens lower. Same scenario on ROVI. If it opens lower, basically tells us they're not going up through this level, and this level being the resistance area right here. DGIT, this one's still acting well. No, it's not. I would use today's low as a stop. If it's still in an uptrend, it needs to open and trade higher. If it comes back down through today's low, that means they're probably bringing it back down to the test the T-line, and then you have to see what to do with it at that point. MEI closed below the T-line, supported on the 50. Should have been out of this one today. The only way to stay in it, if you're in it, is it needs to open positive and trade positive. On the other hand, if it opens lower, you've got a doji with a slight gap down through the T-line, and if it doesn't support at the 50 tomorrow, it could go all the way back down to the 200-day moving average. IM, blue ice failure, that one should be going to the 200. We did TSO, same scenario, going to the 200. CY. Oh boy. CY. CY. See why this takes so long. Slumberger. Well, what type of hiccups do we have in this thing tonight? Okay. There we go. Now this is a fine howdy-do. CY, stuck sideways. I don't know whether I'd short it, but I definitely wouldn't be long. This is probably one, because it's in a sideways pattern, I wouldn't be trading it at all. And Slumberger, this one you can be shorting. There's the blue ice failure, which means if you're in a downtrend, at least it's got this much more to go over the next couple of days to find a support level. And Pulte Homes, another one, rolling over, couldn't get up through the T-line. Rolling over, here's your next target. Or there's your next target. ATHX, moving in the right direction. This one you continue to hold until you see a sell signal. Let's see, yeah, Ray got out of all the positions except UNXL. It was even trading up $1.40 at one time today. So if this opens positive, you can still be buying this because you have another doji sandwich setting up. And if you have another day like this, that means I'll be taking it up into this territory and hopefully past that territory. Kohl's, another one that's in a sideways mode. You can be shorting it, but your first obvious watch is right there at the 50. S.GOL. This one coming back down below the T-line. And as you can see, for the last 4 or 5 days after it gapped up, it's not going anywhere. So I would have been out of this one definitely today, number one. And number two, if it does open lower tomorrow, you want to get out of it. The only way to stay in it is it has to open positive and trade positive tomorrow to stay in this one. MLNX, stay long as it doesn't close below the T-line. SNTS, very Shirame, but it did close above the T-line. This one, to stay in it, has to open higher and move higher to stay in it. Otherwise, if it opens lower, you close out the position. That's a bearish Shirame. Exxon got whacked today. Probably more downside to this one. And we did UNXL, ACAD. Another example of if it's something good's happening, they'll open up positive after a big day and take it positive. If they open it lower, the probabilities are you want to get out of the trade with a buy stop right back up above the high. Home Depot sold off today, but didn't break the trajectory of the fry pan bottom. Another case of using the T-line as your stop. And Abbott, this one, a gap down, flutter kicker, not a flutter kicker, but just a doji gap down. If this opens lower tomorrow, it's heading to the 30, to the 50. And Siri, left-right combo. This one you can't be shorting it. This one you want to be out of if it opens lower tomorrow. And Angie's List held up reasonably well, but same scenario here. We got a doji, so it has to open positive and trade positive to stay in it. If it opens lower, you want to get out of it because if they bring it back down below the T-line, you can see that there's no upward momentum. It's sideways, which means if they open it lower, they're either going to bring it down to the 50 or they're going to trade it sideways until the 50 catches up, which means you'd be sitting with your money there until it did catch up. TOTS. It looks like a very, very low volume stock. I'd be afraid to be trading it. And FXY. This one you can expect hopefully a pop back up to the 50-day moving average. And BDBD held up well. You stay in it as long as it stays above the T-line. But Doji right here at the T-line tells you it has to open positive to stay in this one. EVR. Stay short. Good possibility they could bring this all the way down to the 200-day moving average. And how did I skip all the way down there? AMGN. Bearish Harami. If this opens lower tomorrow, close out the position. If it hits, see that it's supporting on the T line, you can always buy it back. Cisco didn't stay above the T line. He had a hanging man. Harami, a lower open today. If it opens lower, you can be shorting it. Let's see. FXE. A failure here at the 50. If this one opens lower, you want to be shorting it. We did BBD. Let's see. SLCA. Another one that you could be shorting on weakness tomorrow, which means it wouldn't be supporting at this little support level. That should be your next target. We did DDD, which failed at the 50. Look for it to come back to the 200. Bees are home. Oh, Shuzwitz. This one had a hard time, couldn't stay up above the T line. Here's a case where you had a bullish confirmation. It needed to open positive and trade positive today to be in it. It opened lower and went the opposite direction. Closed back below the T line, which means the T line is still affecting the downtrend. Stay short. CF. Another one where you want to stay short. Wave 1, Wave 2, Wave 3 in progress. MPEL. Looks like it's got a double top. Doesn't have a sell signal, which means I probably wouldn't short it, but I wouldn't be long right now. So anticipate that it might be coming back to the 50 and then watch for another buy signal at that point. Herbalife. This one is probably a good short from here because it's failed again at the 50, now gapped down a little bit, broke through the support level. This one's probably got some more downside to it. And CTRX, another one that doesn't have a sell signal, but if it did start trading below the 50, you can be shorting it. Just use the 50 as your stop. It shouldn't come back up through that level. LinkedIn, same scenario here. That's probably not got big downside to it because it doesn't have a reversal signal, but it might just lollygag until the 50 catches up. GWW. This one I wouldn't be long or short, as that's too crummy looking sideways. HGG, another one that's been acting well. This one probably has a potential of coming back down to the 50-day moving average. And Rovi, we did. Rovi, if it opens lower tomorrow, you're out of the position. Tells us they failed up here at the resistance level. James, the double line is when I tell Jim to do the double line, then you can ask for individual stocks. Okay, SMN. Oh, SMN. All right, that's a short on basic materials. Okay. Nora, when we wake up in the morning and we can see that the pre-market futures are down 50 points, 30 points, 80 points, that means it's opening weaker. Now, in a bull market, that may not mean as much, but after a signal like yesterday or today, if it is opening weaker, it's continuing this move. Now, over here, if we saw a situation where, let me pick out something. If we saw a situation where it was kind of in an uptrend, but it opened lower, and it was down 20, 30, 40 points, it wouldn't mean as much. But right now, with the selling starting, or a strong sell signal, and opening weaker, meaning the market's negative on the pre-market futures, you probably want to go with the shorts. I'm going long because Kramer says so. All right. Zach, I'm sure your mother said if somebody told you to go jump off a bridge, would you go jump off a bridge? Royal closed out today because Royal needed to be trading higher, and it was selling off. It might be only coming back here, but right now there might be better opportunities. So someplace else. That's why I wanted to get back to cash, because again, some of these might be providing some very good opportunities on patterns that we can recognize. For example, Netflix. I'll be ready to short this one. If it comes back down, or if it opens weaker tomorrow, I'll buy some puts, anticipating they could pull the plug on this one and bring it all the way down there. Sam, no, that's part of the problem of not part of the problem. That's the game. That's the game, or the playing field. Is when you have markets. Now, again, I made some very good profits being long right in here, mostly in options. But today I gave back about half those profits. So I had enough to buy two 1966 Cadillacs convertibles. Now I only have enough to buy one Cadillac convertible. But what you want to do is, you need to know the simple rules. If you see a doji in the overbought condition and they're opening it weaker the next day, you know that they're probably going to bring it back to at least the first support level. Does that mean you get out of positions? Well, if you're day trading, yes. Come out of it, take some profits, and then see what it does when it gets down here. Because we don't know what it does when it comes down here and closes at the T-line. It might open up the next day and go positive. Or it might keep right on going. So why take the risk? If you see that you've got a doji or any signal and it's confirming the next day, take your profits. There's always another day. I used to hate to give up some of the profits that I made, because, man, that was a good trade, and I don't want to give back half my profits. That's bad. But then I discovered tomorrow's another day. That money that I took out here on profits, I may pick something that put that triples my money. So why worry about what this trade isn't doing for us anymore? There'll be another trade to set up. I don't have anything on Elliott Wave, Suju, and the reason for that is even the people that are experts at Elliott Wave, and even I forget what his name was that actually developed Elliott Wave, said it was subjective, that it was just something to give you kind of a format. So I don't use Elliott Wave. I use the wave process that usually you have a wave 1, wave 2, wave 3. And then when wave 3 is done, then I've got a wave 1, wave 2, starting wave 3. So I'm not going to be in a position long enough to worry about wave 4 or 5 ABC retracements. Yeah, and I also belong to the Market Technicians Association, and the local chapter in Houston has a few Elliott Wave people, but I always go with the example that if you put 10 Elliott Wave analysts in a room, show them a chart, and ask them what wave they're in, you'll get 40 different answers. So let's see. Okay. In pre-market, I know you watch the futures, but do you relate the futures to the pre-market fair value? Yeah, I try to see whether, see what the fair value is, but I just want to know what the direction is going to be. If the fair value and the futures are offset enough that they're not moving in any direction, that's what tells me it's not moving in any direction. All right, futures are up 50 now. But remember, the futures right now doesn't mean a hill of beans because we're still, 10 hours away from the market opening tomorrow. And so we want to know what the investor sentiment is at 4 minutes before the market opens. Okay. Also, just a reminder, we're going to be doing the private training session next week, so anxious to see a few of you in Houston. But I think we have one seat left. If anybody's interested in a 2-day compressed learning candlesticks from A to Z and all the nuances that are involved with it, this is not trying to put a sales pitch on anybody, but the feedback I get from most people that have gone through the private training sessions is that afterwards you're not in the learning mode and experimentation mode. Afterwards you're in the confirmation or the what's the word I'm looking for? You're confirming what you've learned, and it sinks in a lot faster. Didn't Bob Prechter miss the big move? Yeah. As a matter of fact, when we get the long-term trading area set up, I'm going to have Bob come on for an evening and give his point of view. Now, Bob is constantly preaching the downside, which, like the old saying that even a broken clock is right twice a day. And I can remember Joseph Granville was always preaching the downside, and that was when the market was at 750 to 1,000, and he finally changed his mind when it got to 3,500. Do you trade differently during options expiration week? Yes. For example, I closed out a lot of the April options today because the prices of options will change dramatically from Friday to Monday. The reason for that is on Friday you still have another full week for expiration. On Monday you're in expiration week, so there's a definite change of sentiment. So usually I try to be out the Friday before, or if I think the market was still heading in the right direction, I want to be out early that next week. Let's see, did I answer that? Yes. So now, if I think there's a positive trade in between now and Friday on a stock, I'm probably more apt to go go into it by selling the puts instead of buying the calls because of the time factor. The time factor is if I'm buying the calls, I've got to hit in 3, 4, 5 trading days. I've got to overcome the premium as well as the intrinsic value to make money on that option. And it has to move in the right direction. Whereas if I'm selling the puts, if it doesn't have to move very much to make money because of the time decay. So we will be doing sessions here very soon on the different strategies that you want to use at different times with different price patterns. We jelly-filled donuts, but try not to have them too big because I don't want everybody dozing off while we're sitting. Lisa, no, but if you can get a big enough crowd in Australia, I'll be glad to come over. Let's see. Will you be doing another in Houston area in the future? Probably not for another year, but we will be doing sessions up on Keuka Lake this summer. So if you're planning on or would like to do a private training session, the Keuka Lake one is we're all in one big lake house. We eat right there at the house on the porch, or some nice restaurants along the lake. And our breaks are that we throw on our bathing suit, take a refreshing dip, and then come back and sit in front of the computer screen. Okay. Yeah, I wouldn't be surprised to see if it opens up a little bit and then starts rolling back over. Well, Bob has made his fortune by being a bear in the market. Lisa, email me. We'll figure out if there's some good-sized clubs over there. I could always come and do a free presentation. Frank, no, I don't do anything with deltas. I'm training the patterns. All right. Where is that on the lake? Keuka Lake, which is one of the Finger Lakes of New York State. The Cartech, and a good thing about these private training sessions, especially at Keuka Lake, but any place, is at least now we know the faces of each other. Okay. Bill, I was out in where was it? San Francisco about a month ago. Yep. Yeah, Corey, that's probably why they're afraid to see me in a bathing suit, is because of the weight you gain. Sam, all you can do is follow what the signals are telling you. Lisa, I will email you. So with that, all right. Sam, ask that question again in the um, chat room tomorrow. We'll expound on different ways to protect your profits. All right, everybody have a good evening. I hope this Boston event doesn't put a dark cloud on our economy. So with that, everybody have a good evening. We'll see you in the chat rooms.